Well, good afternoon, everyone. Welcome back to the channel. So we see a common theme with dividend investing, which involves high yield dividends with constantly decaying NAV, or as we call it, NAV erosion. So as most investors, we want to be able to have our cake and eat it too. We want a stable NAV with the high yield dividends, of course. One thing I would say before I delve into it, because we mainly focus, of course, on Yield Max, Defiance, some Roundhill, some Rec shares in terms of the high yield dividend funds, but there are some lesser known ones out there, and there are some that used to be the hot topic like a year or two ago, like the QYLDs of the world, which we'll talk about in this one. But the general theme that I've started to really focus on in my last few videos is that growth is going to outpace income in the long term. There, I said it. So here's the thing. Okay, income is great and all, but every fund we look at when I do analysis on Seeking Alpha, every fund we look at, the underlying, the index, or growth stocks far outperform it. And here's the thing. Okay, so dividends are a form of income, right? Yes, I get that. But and I want to get this out of the way. This is like the intro before I actually get into what I'm going to cover. But I want this lesson to be absorbed, so to speak. So here's the thing with like a growth stock. Okay, so take NVDY for yield max. Okay, it's up 120% in total return, right? But take Nvidia stock over the same time frame, it's up double. And if you need the income, sell some shares. And here's the thing: when you sell the shares, those shares, if you held them over a year, they're taxed at a long-term capital gains tax rate. I see some of the comments starting to echo what I've been saying, by the way, which is good. Some of you are catching on, but when you sell a stock that you've held for 1 year, it's a long-term capital gain, which is typically a 15% tax rate instead of ordinary income tax. So there's tax benefits to be had as well to the growth strategy. I know that's not talked about as much. Taxes are not discussed as much. A lot of people say consult your tax advisor and whatnot, but I look at it that taxes are an area of finance and do need to be discussed. So when I have a nugget or two of wisdom, I'll certainly throw them out. Anyway, all right, Richard King gets the trophy today for being number one. Welcome, Chuck Stank, number two. Theocratic Kingdom, time to make money. Exactly right. Just heard about TUGN, like the stable NAV ETFs. Amazing. Yeah. Yeah, another channel covered it. There's another channel on here that has popped up and gets like insane views and stuff. So I try to take notes and I'm like, oh, I see this topic seems to be the hot topic of the day. Anyway, depends on your account. If trading in an IRA, all withdrawals are income. Well, that's true. That's actually a really good caveat there, Wild Giraffe. So yeah, in an IRA, if it's a traditional IRA, then yes, your withdrawals are all going to be taxable at like a 20% tax rate because they went in it's a tax advantaged account, meaning you contributed. It was tax deferred, as they call it. So that's a good point if you're of retirement age or near it. I only like qualified dividends, but I also like REITs as they have tax advantages. That's true. Oh, perfect. You know what? You gave me a bonus one to cover, actually. CLM. It's one I should have been covering on here a long time ago. Anyway, so let's dive right in. The first one we're going to cover is known as I think it's TULGN or TLGN or something. I'll figure it out when I type it in. How about that? Figure it out on the fly. Okay, of course, on Seeking Alpha, I still have what I was looking at yesterday. What does Parker say here? Taxes are very important and are not considered enough. I agree. Neos has the right idea with taxes. Oh, yeah, Neos. I need to cover Neos too. Maybe try to get them on. Okay, let's seek some alpha. Let's make some money, as the commenter said. By the way, the markets are closed tomorrow for Good Friday. Of course, I usually consider every Friday good, but tomorrow is particularly good before Easter, right? Okay, let's see. Is it TUGN? Yes, there we go. See, I told you I would figure it out when I typed it in. Figure things out on the fly, right? Best way to go. Okay, so TUGN over the last year, we are up 30%, which is pretty good. So if we go to total return, select metrics here, total return. Am I defaulting to total return? Ah, look at that. Seeking Alpha's caught on to me. It's got me. Oh, that's because I had this up to before. I think the default is price return. Let's look at price return. Price return is 18.07. So total return, as we saw, is 29.07. So really good. So this one is, because I literally really don't know anything about it. I just learned about it today, actually. SA rates it a sell, so not too encouraging. What's this? JEPI muted 0 date to expiration implied volatility, big yield not yet tested. Um, I could look at JEPI actually. Let me do this here. TUGN. So this is the STF Tactical Growth and Income ETF. The grades are across the board here. We got an A. We're only missing a B, but we've got C, D, and F. So we've got Microsoft, Apple, Nvidia, Amazon, option on NASDAQ. How about that? Meta, Broadcom, Alphabet, Total. Well, I can tell you, if you were in a fund of funds of all of these, you would be better off. But I know this is a dividend one, so let's see, 0.65% expense ratio. How long has it been around? Since 2022. So it's only dropped a couple bucks, and that was in a very volatile market. So let me go look at total return since 2022 compared to the S&P. Check this out. See, there were some points that we were almost identical in terms of price return. So that means in terms of total return, we would be almost identical with the S&P. But again, and I'd like to have a debate with someone on that if somebody wants to come on, but I'm going to keep hammering that point home. Long-term growth, you're actually better off because with the tax ramifications, when you consider them, dividends are taxed as ordinary income for the most part, whereas long-term growth, you're going to be taxed at your 15% capital gains rate. Okay, so TUGN comparing to the S&P 500, almost the same. Now let me look up, I'll add in, we'll look at QYLD. QYLD's actually started to rebound. QYLD total return year over year is 19.29%. Now this one was down in terms of like the 2022 market. If I go back to price return over here, let's see, price return alone, it was, see, it's down 20% over that time frame. We were slightly up in terms of price return. I actually sold some QYLD, but it's a more stable NAV than Yield Max. And I know Jay has explained how they do things a little bit differently. Now, SVOL is actually performing the same as QYLD. If I type in, oops, let me go back here. I know what I did. I typed it in the search bar instead of here. So let me go back here and let me add SVOL. SVOL is another one I would consider stable. There's some ESG funds, but I'm going to stay away from those. I'm not going to cover those on here. Let's see here. Oh, CLM as well. Stable NAV. Do you even know what that means? Yeah, net asset value. What am I missing? Do you disagree with my point though about growth, about taxation on growth? I mean, what's the point? I've been seeing your comments pop up here, jet engine, popping up, I guess, like a jet engine. I don't know. I don't get the joke, but what's the point when, like, if you take NVIDIA stock versus NVDY, and it's performing double what the dividend fund is performing, then what's the point? I'd like to see your answer on that. Okay, back to this. Okay, so SVOL and QYLD are performing about the same over the last year in terms of price return. So then if I go back to total return, so SVOL is one of my favorites, even though it's based on volatility. 22% over the past year, QYLD 20%. TUGN is really good. Now there are some other, I said I wasn't going to get into them, but there are some other ESG funds that the company that does QYLD, the Global X, I think they're called. They do some of these ESG funds, but let me type in CLM. CLM is one I'd like to start covering on here. This one is flat for the last year, 0.94%. I just made the same mistake again. Okay, let's do this here. Is that total return? Wait a second, let me add it. Select symbols, CLM. 21% in terms of total return, but in terms of just price return, In terms of just price return, 0.94. So that means that the dividends, let's go look at the dividends for CLM. Let me circle back here for a second and check comments. Oh, Mr. Jet Engine disappeared. I was looking forward to a response. How do yield max do things differently? I didn't see the recording. Which recording? I kind of figured. That's okay. I like having different opinions on here. I'm not gonna, you know, I'm not gonna like ban or silence different opinions. I welcome all opinions, but I just like to have a debate. I mean, if you disagree with me, then come back with a counter and we'll discuss it. Also, everyone has different tax implications for dividends, so don't consider this. For example, you pay zero tax. I want you as my next guest on the channel. I want to know how you pay zero tax. You want to come on a live stream tonight and debate? I want to I want to talk to you about that for sure. Guessing you don't have income. That is a funny, like, just knee-jerk reaction to a comment like that. But maybe he's in accounts that are like really tax advantaged, or maybe he's got assets that are he owns everything, and maybe he has a way of doing it. A legal way, of course. You can't assess CLM from a chart. Well, thankfully, a chart is one way to assess things, but I have other ways to assess things too, including the advanced financial forecasting equipment. So I could assess it there. Is CLM good? Signs point to yes. There we go. Case closed. It drips at the NAV. So compounding isn't strong. And if you sell before the reset, you can make over 50% just from that. Sure. Oh, you want to come on? I want to hear about how to pay zero taxes. And I'll even title it that. What's this? If you don't have income, you can't get up to 40K in dividends tax free. Well, what's the lowest bracket? It's like 10%. It's 0 to 10%, but that's if you make like from what 0 to 15,000 or something. Yeah, I tend to agree with you there, Gators Rock. Let's see. Portugal NHR. Definitely would like to hear about that for sure. All right, let's delve into some of these dividends real quick, and I'll probably may try to come back for a live show tonight or tomorrow. We'll see. I don't want to, cross airwaves with any other channels doing live shows, so maybe I'll do one late. Um, but I would definitely. Hey, Strateg, how do I say it? Stratege. Are you in my Discord? You could pop on a live chat. And if I do a live show, you could discuss it there for sure. Anyway, okay, let's look up. I was really hoping for a response here. I like comments like this. I like challenges. Um, anyway, let's see what we got here. Oh, there you are. There you are. I was looking for you. Comparing the capital appreciation of NVDY and its underlying makes no sense. Why does it not make sense? They have different goals. I don't care about the different goals. One is up 250% for the year, one is up 125% for the year. So, yes, you're right, different goals. One's goal is to pay income, but total return, you're an investor, you care about total return, right? So, one is up double the other. And if you look at it from a tax standpoint, now I get it. If you're retiring or if you're close to retirement, you're withdrawing from an IRA and all that, you might have different tax implications. I almost made up a word there. Sure, you would have laughed at me for that. Um, but yeah, I mean, 15% long-term capital gain versus ordinary income. I just don't get it. I mean, maybe I'm missing the boat. Maybe I just need you to enlighten me. But I may be missing the boat. Like I say, you're not. Okay, so join. Because, like I say, there are only two types of people in the world. There are current Discord members and future Discord members. Is this channel pivoting away from income funds, or are you covering all types of strategies? I'm covering all types, honestly. If you see the title of the video, I'm covering high yield dividends with the stable NAV. So that's what the bulk of my audience is. But yeah, I am incorporating more growth as well. And I'm just pointing out, like from a total return standpoint, that NVIDIA stock outperforms most of the underlying high yield dividend funds. But look, 125% total return in terms of total return is great. I'm not saying it's bad, but NVIDIA, like I say, since May, I mean, you're crushing it. Yeah, 200, I say 250. It's like, well, since March. If we go to May, it's like 200%. But still, total return as investors, right? I'm just pointing different things out. Like I say, and I've been saying this from the beginning, so I wouldn't say there's any pivot with regards to this, but I am 80% index investor, growth, and real estate. The other 10 to 20% is where I do speculative investing, high yield dividends, stuff like that. There's a lot of people on the other end of the argument that think that there's no place for high yield dividends. So I say, that 10 to 20% allocation, if you can get to a point where maybe they produce a full-time income, then that's great. But anyway, okay, let me put the Discord link in here. We've been going for a while here, so let me do this here. Let me go find the Discord link. Anyway, and yeah, Jet Engine, feel free to pop in sometime for a live show. Let's see, where is my Discord link here? It's in the community tab, but I'll just make it easy. I need to start putting it in every video too. So here you go, Strateg. Am I saying your name right? I hope so. So here you go. Here is the Discord link. Feel free to join. I'm eager to hear about your tax strategies. I think it's great you're covering different stocks and funds. Yeah, I agree. Different topics are great. So I've been a personal finance channel since I started, not just a dividend channel. Dividends have been what's taken off the most for me. But if I get like a all growth audience, the more growth audience I get, the more I'll focus on that. Because the joke I make is that what 80% my 80% of my allocation, I focus the least amount of my YouTube time on, whereas the other 20%, I focus the most of it on. So I'd like to invert that for sure. Rex Randall, most of the underlying will outperform. That's what I'm finding. I'm just reporting what I'm finding. I report, you decide, right? So I'm eager to hear why my argument makes no sense, by the way. We have a Ryan Dingler sighting. Boogeyman, has he surfaced again? He's a character for sure. Parker R. Kevin O'Leary's mom once said if it doesn't pay a dividend, really? Well, that's Kevin O'Leary's mom. That's not Kevin O'Leary. So I don't know. I don't know about the, validity of the statement there, but that is interesting. I mean, technically, a dividend is a return, right? A dividend in a traditional sense is cash flow out of a company. And these synthetic ETFs, it's a premium, basically. So, but you could look at a dividend, you could take your own dividend. Like if you're in Berkshire Hathaway, you could sell shares and take your own dividend, pay yourself your own dividend, right? The dude needs to act his age. Yeah, he's something else. Uh, I'm only worried he will. Not even sure what that is. That's funny though. Maybe he has boogie shoes since he's what's that song put on my boogie shoes since he's a jazz instructor or dancer. I don't know. He's cool sometimes. The income. Oh, here we go. The income versus capital appreciation debate makes no sense. It's quite obvious that you will gain more capital appreciation by owning the underlying. Okay, so you agree with me. So I don't know what doesn't make sense. Well, that's cool. Anyway, all right. How about well said, coach? Waiting for that. He's like he watches me all the time, but he's. Oh well. All right, I read this one. Okay, you all. Thanks for tuning in. Like, comment, and subscribe. And I'll see you all maybe later today. Take care. Have a good one. Bye.